the government of India is spending a lot of budget on the infrastructure growth of the country. There are several schemes like the Nal Se Jal and several irrigation schemes also to provide fresh water supply throughout the country. And to develop this kind of an infrastructure, pipes play a pivotal role in supplying the water. So there are a lot of tailwinds for the piping industry, and one such company in the pipes industry, which is a small cap company, is Prakash Pipes. So we are going to analyze Prakash Pipes in this video. And if you're new to the channel, please do subscribe and hit the bell icon. And if you're not a part of our Telegram channel, do join today as we discuss daily market analysis and a lot of interesting stuff on our Telegram channel. So let's get started. So Prakash Pipes was demerged from another company, their group company called Prakash Industries in 2018. So this company has primarily two businesses. Their major business is manufacturing of pipes, the plastic pipes in simple words, and the other business is flexible packaging. In the pipes industry, this is one of the top players in the North Indian region. Their brand is quite well known in this area. And in terms of capacity, the pipe manufacturing capacity is around 67,000 metric tons per annum, and the flexible packaging capacity is about 19,200 metric tons per annum. Relatively, the flexible packaging business is a new business, and this business is gaining more share in the revenue over a period of time, as we'll discuss further. Their manufacturing facilities are located in Kashipur, which is in Uttarakhand, and in terms of dealer network, they have 600 plus dealers across the country. Now let's talk in brief about the management of the company. The second generation entrepreneur, Mr. Kanha Agarwal, is the managing director of the company. He has done his postgraduate degree in family business from Indian School of Business, which is located in Hyderabad, and in the past he has worked with one of the big four firm, which is Ernst & Young. He has good experience in finance and mergers and acquisitions, and now he is taking the family business to the next level. In terms of business, it's a very simple business model. The company has two businesses. The first business is related to the pipes and fittings, and the second business is related to the flexible packaging. And in flexible packaging also they have done vertical integration. In the pipes and fittings business, majorly their main products are PVC pipes, CPVC pipes, SWR pipes, plumbing pipes, column pipes, casing pipes, and PVC fittings. Along with this, they have also started manufacturing the overhead water tanks. Now, where are these products useful? As you know, they are useful in agriculture, construction, then water management. In the second division, which is the flexible packaging division, they have a manufacturing capacity of 9,200 metric tons per annum. And as you can see on the screen, these products are used by various FMCG companies, which are the well-known brands in India. And when we say flexible packaging, their end products are the multi-layer pouches as well as the laminates, which are used as a thin film on these kind of packaging. In the packaging business, they are also doing backward integration. Now in backward integration, when you want to manufacture some packaging product, you also require to print on them. So they are also manufacturing printing inks. You also need to laminate so that the packaging looks good and it is durable. So they also manufacture the laminate film, which is called the blown PE film. And during this process, the printing cylinders are also used. So they are also into manufacturing of printing cylinders. So in a way, they are manufacturing the raw material and the cylinders used to manufacture the flexible packaging, and they are manufacturing the end product, which is the flexible packaging itself. So when any company does such kind of a vertical integration or backward integration, it gives the company a lot of operational advantage, and it also increases the profit margins of the company. A lot of the products they use for their captive consumption, and whatever is excess, the company always has the flexibility to sell it to the outside customers as well. So where are the flexible packaging products manufactured by this company used? They are used in industries like FMCG, the food industry, and the other infrastructure and the other industries. Now in FMCG, products like the shampoos, conditioners, soaps, detergents, all these kind of products use these flexible packaging. In food, whenever we eat biscuits, chips, and other frozen food, these kind of products use this flexible packaging. And other than the food industry, in various other industries like the paints, fertilizers, so all wherever we use the flexible packaging, this material is useful. If you look at their clients, you see a lot of big well-known names, the brands which they are working with them, like Patanjali, Bicano, Cornettos, Nachos, which we have recently, then Havells, Bambino. So these kind of brands are working with Prakash Pipes. In terms of geographical presence, their manufacturing operations and the distribution is located more towards the North India. So in a way, this gives them an advantage of a concentrated brand development, but the disadvantage is it's kind of a regional business, which is a risk. In terms of volumes, let's look at their division wise or segment wise volumes in the recent years. The pipes and fittings has gone down from about 42,000 or 43,000 range in the year FY 1920 to about 36,333 in FY21. So although the sales have increased, the volume of the products sold is going down. On the other hand, if you look at their flexible packaging business, the volumes are steadily growing. It has gone up from about 316 metric tons per annum in FY19 to about 10,400 metric tons per annum in FY22. So that is why I was telling that the flexible packaging business is getting more share of their revenue in the recent years. Now let's talk about the segmental revenue. In FY21, the PVC fittings contributed about 7% and PVC pipes contributed about 66% and the flexible packaging contributed almost 26%. But coming to FY22, the flexible packaging percentage of revenue increased to almost 34% from 26%. And the PVC pipes and PVC fittings were about 8.2% and 58%. So the PVC pipes business in the overall share of revenue went down and the flexible packaging business and the PVC fittings increased. In terms of geography, they get about 25% of their business from Delhi NCR. Punjab and Himachal Pradesh contribute about 5%, Haryana about 15% and the Uttar Pradesh and Uttarakhand about 55%. So as you know, their major revenue comes from the northern states. Now let's talk about the industry in which this company operates. The Indian PVC polymers industry is expected to grow at a CAGR of about 10% in the next 5 years. At presently, the size is about 300 billion. This will further go up to about 500 billion. The CPVC pipes and fittings market is expected to grow from about 45 billion to around 103 billion by FY25. So both the PVC and CPVC pipes industry is expected to grow well for the next few years. Another key trend to observe in this industry is there is a shift from the consumption or the demand from the unorganized players towards the organized players. There are a lot of unorganized manufacturers which don't have any brands or they don't have standardized quality of products. So people are reducing their purchase from such kind of players and shifting their purchase to the companies which are making more branded products and better quality products. So these kind of trends will generate strong tailwinds for these kind of companies which are in the organized segment. In the recent few years, we have also observed that the water tanks industry is growing at somewhere around 10%, but there are a lot of players in this market. There are about 250 players in the water tanks industry in India. The government is also coming up with certain schemes which is generating a lot of demand for these kind of products like Har Jal Jeevan Mission. So in this scheme, there will be an effort by the government to provide fresh water to all the houses in India. Then there is another scheme called PM Krishi Sinchai Yojana. Then Pradhan Mantri Awas Yojana. So these kind of schemes which are run by the government extensively across the country will create a lot of demand for the products of this company. Coming to the next industry which this company is running business into is the flexible packaging. The Indian flexible packaging industry is expected to grow at a CAGR of about 11% for the next 5 years. And roughly the size would be somewhere around 12.72 billion at the end of the 5 years. In the packaging industry, specifically, flexible packaging is the fastest growing segment. So this company is venturing into the right segment. And with the new brands coming up, with e-commerce, with a lot of retail, online and offline brands coming up, there is huge demand for these kind of products. Earlier, people were not so keen about hygiene, but post-COVID, people are very particular about what they consume and how that product is preserved. So packaging is getting more importance post the COVID era. Now, after understanding the business of the company, let's talk about what can be the possible competitive edge of this company or economic moat of the company. The first thing would be that these people are into this business from a very long time, so they have that kind of experience and distribution network and the brand advantage with them. They have also done some backward integration which gives them operational efficiencies. In terms of liquidity position, the company is doing well and it is net debt free, and they have good relations with lot of big FMCG brands which will give them consistent orders over a period of time, and their portfolio of brands is going on increasing. So in terms of these factors, this company is better than the other smaller players in the organized as well as the unorganized industry. What is the growth outlook of this company from here onwards? The company is optimizing its products portfolio. They are introducing new products to their products range. They are doing backward and forward integration. In the present year, that is FY23, they are giving a guidance of about 20 to 25% growth in their top line. In terms of distribution, the company is growing their distribution network. So along with adding new products to their product portfolio, to increase the sales of the existing product, the company is trying to grow geographically. They are trying to add new dealers to their dealers network. And when we talk about the new products the company has launched recently, the roto molded overhead water tanks is the newest product which the company has added to its portfolio. Now look at the revenue mix in the recent years. Earlier in FY 2018-19, the flexible packaging contributed only 2.3% of the revenue. This increased substantially to somewhere around 34% in FY22. So this is the change in the revenue mix which is happening over the years in the recent years by the company. Another thing which the company is focusing on is the focus on their value added products. From the earlier products which were the more kind of a commodity items, the margins are very less. The shift towards the value added products will increase the margins of the company. They have ventured into the PVC fittings, they have ventured into the CPVC pipes and fittings. Now with the new business of flexible packaging, their margins will further improve. So these kind of value added products will improve the product mix of the company. So what are the risks in investing in a company like Prakash Pipes? So first thing is the size of the company. It's a small cap company, so you should know the size of investment you are making in it and the risk which you are taking, as only aggressive investors generally invest in small and micro cap companies. In terms of competition, you see the pipes and fittings industry has several big brands which have excellent quality to compete with Prakash Pipes. So competition is a very big risk in this industry as per me. In terms of the raw material availability, as a lot of raw material is also imported, as well as the movement in the price of the raw materials impacts the margins of these businesses. So you have to be closely watching the raw material prices and availability if you are invested in a company like Prakash Pipes. There is a regional risk or a geographical risk, as the company does majority of their business in selected North Indian states. And if there is any regulatory changes or the government drops the initiatives or the schemes which the government is running, the demand for this industry could be impacted. Within the year also, the business could be cyclical, as a lot of demand comes from the irrigation sector. So if the monsoons are bad or the agricultural sector is not doing well, within the year or a year or two, the demand could be cyclical. Another factor to note is, in the past, the company or the promoters had corporate governance issues. They were involved in some ED cases related to mining. So this could be one reason the company has been given lower valuations when compared to the other pipes companies. So these are the risks you should keep in mind before you invest in Prakash Pipes. Now let's talk about the financials part. The revenue has been steadily growing the last 4 years. It went up from about 340 crores in FY19 to about 617 crores in FY22, which is a very decent and consistent growth. In terms of EBITDA, the EBITDA is also steadily growing. It has gone up from about 40 crores in FY19 to about 77 crores in FY22. EBITDA margin is steadily maintained. In fact, it has slightly grown from about 10 to 11% in the earlier years to somewhere around 13% recently. In terms of profit after tax, the company is doing well. It went up from about 29 crores in FY19 to 47 crores in FY22. The profit after tax margin is somewhere around 7 to 8%, which is pretty decent. The share capital in FY21 recently increased to about 24 crores. This was because in 2021 February, the company allotted about 35 lakh shares on a preferential basis to its promoters at a price of about 74.5 rupees. So another way to benchmark the share price of the company with its value is that 1 year before there was a preferential allotment of somewhere around 75 rupees for this company. The reserves are steadily growing as the company is making profits and good cash flows. The borrowings are under control. It's a net debt free company. The trade payables are also fine. It just has about 24 crores of trade payables on the balance sheet. The fixed assets are steadily growing as the company is regularly doing capex every year. The inventory levels are growing in line with the revenue, and there are no red flags here. The inventory days are somewhere around 46 days, which are quite normal. The trade receivables are somewhere around 60 crores, so there is no abnormal high debtors in the company. The debtor days are somewhere around 35 days, so the money is received in time by the company from its debtors. There is about 46 crores of cash in FY22 balance sheet. The operating cash flows have always been positive, and they have generated about 51 crores of operating cash flow in FY22. The free cash flows in some of the years are negative, as the company has done capex in all these years. But in FY22, you see that there are 13 crores of free cash flows. The ROC is further improving. It has gone up from about 29% to 32% in FY22, which is a very good number. Now let's talk about the shareholding. The promoters hold about 44% stake in the company, which is slightly on the lower side. There is hardly any institutional holding in the company. The FIIs, ADIs are very low. Dolly Khanna holds about 2.71% in the company, which is a renowned investor, and public holds about 55%. So there's no pledge. The promoters are slowly increasing the stakes in the company. They have improved from about 38% in December 2020 to about 44% now. Now let's talk about the competition and the valuations of the company. In terms of competition, the company competes with a lot of big brands like Astral, Finolex, then Prince Pipes, and in the smaller companies, the company competes with Texmo Pipes, Kriti Industries, and there are a lot of regional players also. In terms of valuations, you see the revenue is about 700 crores and EBITDA is about 12%, ROC is about 32%, and it trades at a PE about somewhere around 11. Now, why is this PE different from what you can see on the screener is because I have excluded the other income while calculating the valuations, as that could be a one-off item. Market cap to sales is somewhere around 0.6x, PB ratio 1.8, and the last 3 years median PE is somewhere around 8. So comparing with other small cap pipe manufacturing companies, they are trading at a valuation of somewhere around 0.30 market cap to sales and 0.8 market cap to sales. But the EBITDAs and return ratios of the other two companies are much lower than Prakash Pipes. So in terms of valuation, it appears to be that the valuations are very attractive. But there are a few points to note in this company. The first thing is the business includes the pipes as well as the flexible packaging business. Now pipes, it's almost 1/3 and 2/3. So 1/3 business comes from flexible packaging and 2/3 business comes from the pipes industry. So normally in flexible packaging business, the valuations of other companies are comparatively lower. So when I say lower, they are generally given about 1 time market cap to sales on a normal side. Whereas in pipes and fittings, as the company grows, the multiples increase to even up to 2x the market cap to sales. So considering the pipes and fittings as well as the flexible packaging, a market cap to sales of about 0.63x for this company still appears to be reasonable. But I suspect that this company has been given lower valuations by the market because of the shady image of the promoters and the corporate governance issues in the past. So if the promoters are able to gain the confidence of the investors, improve the image of the company, then a re-rating of valuations in this company is definitely possible. The stat auditors of the company are Chaturvedi and company. The ROE is 22%, which is good. It's a dividend paying company having a dividend yield of somewhere around 0.66, and there are no material related party transactions in the company. Now let's look at the chart. The chart is in a good uptrend but consolidating on the sideways for the last 1 year. So the zone of 140 to 150 should act as a good support for the stock. So if somebody is convinced with the financials and the business model of the company and prepared to ignore the corporate governance issues in the company, they can consider entering the stock in the support range of 140 to 150. So this is about Prakash Pipes. To summarize, we'll discuss the thesis and antithesis points. Starting with the thesis points, the fundamentals of the company are very decent. The company is diversifying their business into the flexible packaging business, and the margins and return ratios are further improving. Geographically also, the company is trying to expand to other geographies. As a sector also, India is expected to spend a lot on the infrastructure development in the next few years. So there will be good demand for the products of this company. And in terms of valuations, the valuations appear to be very reasonable. Coming to the antithesis points, it's kind of a regional business. So there is a geography risk. There is huge competition from both organized and unorganized players. There could be regulatory or policy risk if the government policies change or the infrastructure spending is reduced. The demand for these products may also go down. The company is doing capex every year and entering into a new business. So there is execution risk of being successful in these new projects. And the corporate governance risks will always be on back of the mind when we are investing in such companies. So this is about Prakash Pipes. I hope you like the simple unbiased analysis. So if you like the video, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, whether it be a small cap or micro cap company also, feel free to comment the name of the company in the comments below. I'll try to make a video on it. Thank you for watching and have a wonderful day.